Welcome back to the channel, guys, because today we need to get brutally honest about something everyone keeps talking around, but nobody is actually dissecting correctly. Quantitative tightening officially ended on December 6th, and the question blowing up everywhere is the same. What does this actually mean for XRP? Not the fantasy version, not the opium-rich Comic-Con theory, but the real, data-driven, historically consistent version. This is the first time I'm bringing a completely new set of tools, charts, and long-range cycle data to break this down. And if you still care where your XRP is heading in the next 24 to 36 months, you need to hear this exactly as it is, because let's cut the nonsense. Yeah, the market isn't falling apart, it isn't broken, and it isn't manipulated into oblivion. What we're seeing right now is what every major macro cycle has shown before: price action reacting to moving averages and macro liquidity shifts. XRP didn't magically start free-falling because people stopped believing. It started free-falling the exact moment it broke below its 50-week simple moving average, the same signal that marked every previous XRP bear market bottom. And the moment QT ended, every smart investor instantly shifted from what's happening to what does the data say is coming next. Here's the truth nobody wants to say out loud. History is repeating with scary accuracy, and pretending otherwise is just emotional coping. The 50-week SMA break is not noise. It's the same precursor we saw in 2018 and 2021, and now again in 2024. And until people stop obsessing over and start looking at the actual macro triggers that drive these cycles, QT ending, liquidity injections, macro reversals, stimulus resets, they're going to keep getting blindsided. Today, I'm going to walk you through exactly what followed every QT ending in the past and what XRP's price action shows is coming next. If you actually want answers rather than fantasy timelines, you're in the right place. Let's get into it. To understand what comes next for XRP after the end of quantitative tightening, you need to stop looking at this market emotionally and start looking at it structurally. Markets don't move because influencers scream bull run or because Twitter sentiment flips bullish. Markets move when liquidity conditions change, and liquidity conditions just experienced one of the most important turning points we've seen since 2019. QT, the systematic draining of liquidity from the financial system, finally halted on December 1st. And whether XRP holders understand it or not, this shift has historically been the opening act to the most explosive phases of every major crypto bull cycle. But that doesn't mean instant moon, and anyone selling you that idea is either clueless or deliberately misleading you. When you examine XRP's chart with an unemotional lens, the same pattern repeats with uncomfortable accuracy. Every major bear market bottom begins with a breakdown under the 50-week simple moving average. XRP fell below this level in 2018 and bottomed months later. It fell under it again in late 2021, bottomed shortly after, then began the slow climb into recovery. And like clockwork, XRP broke under the 50-week simple moving average again in October 2024, the exact month Bitcoin also lost its 50-week trend support. People act like some mysterious dark force pushed XRP down. No, it's data structure and macro liquidity doing exactly what it has always done. Once an asset loses the 50-week simple moving average, you never get a V-shaped recovery. You get a stage sequence, breakdown, panic, base formation, relief, rally back toward the simple moving average, rejection, and finally the true macro bottom. XRP hasn't completed that sequence yet, and pretending it should behave differently this time is just people trying to bend reality to match their emotions. The bounce hasn't happened because XRP simply hasn't reached its structural bottom yet. That's exactly what the chart and history are both telling you. And this matches Bitcoin as well. Every single bear market bottom in Bitcoin's history formed after breaking the 50-week moving average and before the next major monetary policy expansion. Now let's talk about quantitative tightening, because this is where macro and XRP collide. The last time QT ended was July 2019. What followed? Markets dipped for a few weeks. Sentiment collapsed. Everyone screamed, crypto is dead. And then, once QE was announced, Bitcoin and XRP both launched into one of the largest bull markets in history. Not because of magic, because liquidity returned. QT ending is not bullish by itself. It simply stops the bleeding, QE the expansion, and is what lights the fuse. But QE never arrives instantly after QT ends. There's always a lag. Historically, that lag has been around 12 to 18 months, which puts us right into 2026, the exact timeline where structural analysts expect the next generational bull run to peak. People hate hearing this because it kills the fantasy that 2024 or 2025 is going to produce insane new highs, but the data doesn't care what anyone wants. Liquidity drives markets, and liquidity expansion is not happening today, but it is coming. And when it does, XRP will not be sitting at $2, because the same historical pattern occurs every cycle. The period after QT ends is when assets complete their macro bottoms. It's when charts look hopeless, sentiment looks dead, and people begin capitulating out of boredom, not fear. That's the environment we are now entering. The emotional pain traders feel right now is actually the most bullish long-term signal you could ask for, because bottoms never form when everyone is optimistic. But here's the critical part. Once XRP completes the bottoming structure, the rebound tends to be violent. Look at 2018. Look at 2020. Look at every period where price reclaimed the 50-week simple moving average after losing it. Each time it led directly into a bull market breakout, and now combine that with the fact that quantitative tightening has ended, rate cuts are projected, and QE is almost guaranteed once economic stress reaches its breaking point. We are walking directly into the same setup that produced every major bull run in crypto history. The difference this time, XRP has ETFs, institutional custody, regulatory clarity, and real global utility coming online. So yes, XRP is likely to drop lower before it goes higher. Yes, the relief rally is coming. And yes, the real monster move, the one everyone has been waiting for, only begins once quantitative easing officially arrives. Everything else until then is positioning. Now, let's cut through the fantasy and talk about what people don't want to hear. The actual market psychology that will drive XRP's next phase. Everyone right now is obsessing over the charts, the panic posts on X, and the endless cycle of XRP is dead comments. It's predictable, and it's the exact kind of sentiment you see at macro bottoms. But here's the uncomfortable truth. Most people aren't actually frustrated because of price. They're frustrated because their expectations were delusional. They expected a multi-trillion-dollar new financial system to roll out in one cycle. They expected ETFs, CBDCs, QT ending, BRICS adoption, tokenization, and macro liquidity crisis to all magically align and pump their bags instantly. That's not investing. That's wishful thinking dressed up as analysis. Every major macro shift operates on multi-year timelines, not Twitter timelines. If you cannot stomach that, you shouldn't be in a market where the highest returns go to the people who endure the longest periods of boredom and pain. XRP is currently sitting in a zone designed to shake out the people who have no conviction, no patience, and no grasp of macro structure. The market doesn't punish them because it hates them. It punishes them because they fail to understand how cycles actually work. Let's get this straight. The end of QT is not a magic pump now button. Historically, the end of QT marks the start of the bottoming process, not the end of it. When QT ended in 2019, Bitcoin didn't moon the next day. It dropped for months. Sentiment cratered, and only after QE began did the real rally ignite. The market is screaming the same message right now. Sit tight, expect pain, and stop pretending every dip is the end of the world. We're repeating the same structural pattern down to the week. People also forget a brutal but important fact. Institutions accumulate during fear, not euphoria. They buy when retail is exhausted. They accumulate when prices chop sideways. They load up when headlines look bearish, when charts look broken, and when retail capitulation hits peak levels. XRP right now is in the exact accumulation zone where institutions quietly build positions while retail cries on social media. If you think the ETF issuers, custody providers, tokenization platforms, and payment institutions are waiting for your favorite YouTuber to say bullish, you're delusional. Now, let's address the Bitcoin dominance narrative. Yes, dominance is likely to collapse eventually, but it won't collapse while macro liquidity is still tight. Bitcoin always dominates early in cycles because it functions as the liquidity sponge. But once QT ends and liquidity starts creeping back in, dominance stalls. When QE officially hits, dominance breaks. That is when altcoins explode. Anyone expecting XRP to outperform Bitcoin right now, during the most liquidity-starved part of the cycle, simply doesn't understand macro dynamics. The Fed ending QT is your warning shot. The liquidity destruction phase is over. The liquidity expansion phase is next, but not today, not this month, and maybe not even this year. Could XRP get a relief rally? Absolutely. Could Bitcoin retest $12,000? Very possible. But make no mistake, until QE is officially announced, any rally is a trap for impatient traders and a gift for institutions accumulating at discount. Here's the hard truth. Markets reward discipline, not emotion. If you see every pullback as a disaster, you will never survive long enough to experience the upside. XRP is doing exactly what it has done in every cycle. Frustrate, bore, punish, then explode. If you cannot handle the first three parts, you do not deserve the fourth. At this point, you need to understand something most retail investors never wrap their heads around. Markets are engineered to extract liquidity from the impatient and redistribute it to the disciplined. And XRP is one of the clearest examples of this. Every cycle, the same pattern repeats. The chart compresses, volatility drops, sentiment collapses. Influencers start fighting for views by calling for doomsday predictions, and retail begins unloading at the exact moment institutional activity is ramping up beneath the surface. If you think that's an accident, you're not paying attention. Look at the behavioral setup right now. On-chain data shows XRP is leaving exchanges at a historic pace. ETF issuers are buying physical XRP. Institutional flows are climbing, and liquidity in the ecosystem is tightening. Yet the price is intentionally boring. That's how accumulation works. Institutions don't buy breakouts. They manufacture the conditions that force desperate investors to become sellers. People love to say XRP is manipulated. Sure, but not in the way they imagine. The manipulation isn't about pumping prices. It's about controlling sentiment until the supply changes hands. And while everyone is screaming that XRP isn't moving, the macro backdrop is quietly forming the perfect storm. QT is dead. Rate cuts are approaching. Liquidity cycles are reversing. Do you seriously think institutions don't see this coming? They position months, sometimes years, before the headlines reflect reality. Retail waits for confirmation. Institutions create confirmation. Let's address something else people don't want to hear. Alt season hasn't started because it's not supposed to start yet. You cannot have a broad market altcoin explosion when liquidity is still contracting. Even though QT ended, QE has not begun. Until money becomes cheaper and liquidity expands, altcoins will lag. Bitcoin always moves first because it has the deepest liquidity and lowest risk premium. XRP's explosive moment has always come after Bitcoin tops its initial move. But the problem is that most retail traders get fatigued and leave right before that phase begins. Right now, the charts look engineered for one purpose: maximum frustration before maximum expansion, tight compression, long sideways action, fake breakdowns, quick recoveries, no clean direction. This is the pattern that precedes the most violent moves in XRP's history. Yet most people interpret it as weakness because they focus on price instead of structure. That's why they lose. Consider the ETF inflows, hundreds of millions flowing into XRP exposure, while retail holders are panicking about a few cent price drop. That should tell you everything. These institutions don't care about your emotions. They care about positioning. When the supply crunch accelerates, and it will, XRP won't give anyone a chance to rebuy lower. The move will be vertical, and 90% of retail won't be in the market anymore. Here's the uncomfortable truth. Your biggest enemy right now isn't the market. It's your attention span. You want instant gratification in a market designed to reward patience. You want confirmation in a market where confirmation always comes after the opportunity is gone. You want certainty in a cycle that historically punishes people who wait for certainty. So where does this leave you? Simple. You're either in position before the liquidity returns or you're not. When QE is announced, when rate cuts accelerate, when the global money supply expands again, you will not have time to think. The move will be explosive and unforgiving. The charts, the macro landscape, and the behavior of institutions are all pointing in the same direction. But very few people will recognize it until it's too late. And here's where everything comes together. The charts, the macro cycle, the end of QT, the coming shift into QE, the institutional accumulation, the ETF inflows, and the emotional exhaustion of retail. You're watching the exact same setup that has preceded every major crypto expansion in the last decade. But most people are too distracted, too impatient, or too beaten down to recognize it. This is the phase where narratives turn negative, where influencers lose conviction, where boredom destroys discipline, and where the majority quietly exit the market right before the system flips. It's predictable because it has happened every cycle, and yet people fall for it every time. The truth is harsh. If you can't stay steady during compression, you don't deserve the expansion. XRP, Bitcoin, Ethereum, they all follow the same liquidity cycle, and we're in the final stages of the contraction phase. QT is gone. Liquidity stress is easing. Rate cuts are lining up. Institutions are buying objectively, while retail is complaining emotionally. Nothing about this is accidental. The market is structured to mislead people who trade feelings instead of facts. XRP's setup right now isn't weak, it's primed. The ETF demand alone is enough to distort supply once volume accelerates. Combine that with exchange reserves draining, tokenization narratives expanding, and macro liquidity cycles flipping, and you have the foundation for one of the largest upside moves in XRP's history. But that move won't wait for anyone's feelings to calm down. It won't warn you. It won't be gradual. It will be violent, fast, and unforgiving. The exact opposite of what this slow grind has conditioned everyone to expect. The market is basically asking one question. Can you stay convicted when the chart looks quiet, but the fundamentals look nuclear? Most people can't. That's why most people never catch the real wealth-generating moves. They want the reward, but refuse the discomfort required to earn it. But if you actually understand what happens after QT ends, if you understand what QE does to asset prices, if you understand how moving averages behave in contraction-expansion cycles, if you understand why institutions buy fatigue, not excitement, then you already know exactly what's coming. And you don't need opium. You just need patience and positioning. Everything else is noise. So stay focused, stay informed, and stop underestimating how fast this market can flip the moment liquidity returns. If the data holds, the real acceleration begins in the window leading into 2026. But the positioning phase, that's right now. Not after the headlines confirm it. Not after the breakout. Not after retail FOMO returns. Now, financial disclaimer. This content is for educational and formational purposes only. Nothing discussed here is financial advice, investment guidance, or a recommendation to buy or sell any asset. Always do your own research, DY. Evaluate your own risk tolerance and consult a licensed financial professional before making investment decisions. Crypto markets are volatile. Never invest money you cannot afford to lose.